This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. So today I'm going to do something a little bit different. I've already created a video. I did that last week. That was based on an intraday trade I did using a 10-minute and a 2-minute on the spider. Now, if you've watched any of my videos, you know I don't trade intraday. Now, this was done on a simulator for that specific reason. I did it in TradingView, which I don't typically use for trading anyway. But the point I'm making is that I like to go down and do that periodically if I have time. And the reason is that I think it really keeps me sharp, make sure that I'm seeing everything that I can see. And if you can do it on a 2-minute chart, then you can certainly see it on an hourly or a daily or a weekly. I mean, when it's happening in fast forward like this on a volatile instrument, it really puts you to the test to see if you really know what you're looking at. So again, I like to do that periodically, but there's some pretty key things to take away from this that I think you can apply to the longer term time frames. Notice how I talk about the bigger time frame bars and what I'm looking at there, and also the fib levels. And then on the lower time frame, notice how I discuss a little bit about the DI lines and how that gave me a pretty big edge in terms of the entry. So these are things I want you to take away. But the biggest thing that I want you to hear from this is when I'm trading intraday or if I'm trading short term, I have a different mentality than what I typically would have if I'm looking at trend trade. There's a big difference between trend trading and short-term trading. You have to take targets when you can get them, use tighter stops. You have to react a little bit more, but you have to be a little bit more adaptive to what's taking place. So it's all about managing risk when you trade short-term. So I want you to take a look at what I did and let me know if you have any questions or comments. Enjoy. Okay, so I want to do this while it's fresh in my mind, and so it's really this was trading. I was doing some trading because I had time, and I didn't really have any clients calling me or anything like that. It was late in the day. Market had a really ugly day, and it was starting to rally. And so I wanted to just kind of go over some things and show you a couple trades that I did off this micro time frame 2-minute chart and why I did it. And I think this can be expanded and used, or at least I think you can learn some things that you might be able to apply to the bigger time frames. I'm not trying to get you to trade intraday, but I want you to understand kind of the thought process that I go through. And it's when it's fresh in my mind like this, it's kind of easy to do. So let's just start with the higher time frame. Always start with the higher time frame. And we had this monster move to the downside, and then we get this rally back to the 18. Well, I mean, this isn't rocket science, right? I mean, this is what I'm doing and talking about all the time, only this is on the short side. But I've got one thing in my favor. I know that the market's had a really ugly day. It's down pretty big. And I'm thinking to myself, we've got this rally up, but I think there's a chance that it might want to come back down and test this low to finish the day maybe ugly. So that was my premise, okay? And I had the chart. So I don't fight my and I don't make up a premise that fights the charts, but the charts had a really nice pattern here, right? I mean, look at this ADX. So that's kind of how I'd look at this. I'd say, okay, I know I can do this trade up near this 18 up here and have a move down to here, and I can probably have a risk reward that's like 5-to-1, maybe even better than that. So once this got up, so let's just evaluate what happened here. So we had this got a little overdone, got a spike low with a reversal, and then rallied our way up with a pretty nice green bar. But look at what happened right after. We get a doji bar or an indecision bar on the candlestick where you go up and then you come back down and then you close in the middle. It's really kind of indecision after a big green bar. So this comes important to me. And then if you notice on the next bar, we come and test the 18 and we turn and fail. So at least at that point, we were in the process of starting to look like we were going to fail. So at that point, I'm going to the smaller time frame and saying, is there a way for me to get in this trade? I know my goal is to try and play the opposing trend trigger, right? But There are times when I'm going to try and take advantage of what I'm seeing on the bars and see, and maybe in the indicators, and see if I can't even get in earlier than that. So let me just show you a few things. So we had our A, B, C rally, correct? And then we had a big red bar here. And then as we went up to test, we got a doji bar right there. That is the same as this, that was right after this doji bar, really at the same time, because this was the test of that high. And then I guess then right at the start of the next bar, we went up and tested the 18. So once I see that, I'm sitting there thinking to myself, how can I get in this trade and not just make something up? I don't want to just short it because I feel like it's the right thing to do. I don't like to trade off feelings. I want to trade when I think I see something. So MACD wasn't helping. I mean, we had a lot of overrun here, but that happens a lot on these intraday time frames. So you got to be aware of that, and I am aware of that. I've seen it enough. So that didn't bother me, but it's not going to also help me as a trigger. So look at what green DI and red DI were doing. You see how we had an expansion phase here to the upside? So as we moved up here, we got this little expansion phase. And then immediately, while this is taking place here, we're getting this little contraction developing where we make a higher we move up and make a higher bottom and then turn back to the upside. So right here is where the green DI is crossing back down below 25. You see that? That's crossing back down below 25, and it's taken out, it's making a lower high and a lower low. And this is right after that, this is making a higher bottom and a higher high. So I was thinking we're into a contraction. That's actually not a bad spot to short. And so let me just make sure you get what was really going through my head. I thought if I shorted it here, now obviously I'm talking about normally shorting it down here, right? I mean, I wait for the opposing trend and wait for it to break the moving averages. But I'm doing it here, and my reasoning was, okay, we're slowing down the momentum, but I was like, okay, there is such a high probability that this is going to come back to the 18. Now, is it going to hold the 18 and turn back up? That I didn't know. But I felt like there was a pretty good chance after tagging the 18 on this time frame that we were going to come down to here. So I could put on that trade, and then if it comes right back up, I was going to go to, if it got into the zone here, I was just going to go to a break even. And if it turned on a dime and went up, then I'd break even and no big deal, no harm, no foul. Well, it ended up following through a little bit more. And at this point, we're coming down to test the low. Well, we hadn't quite made it down to the low of this green bar, but we were kind of coming back to this area of support, number one. And so I was looking at it and saying, okay, if this price moves up and comes back through these two bars, this bar's high and this 18, I'm going to get out. And my reason, so I moved my stop down to here. And the reason why I did that is I say, okay, if this goes out of the zone, so this went in the zone, and then when it came out of the zone, I knew that if it reversed back to the downside, I'd get short again. And so that's how I played this. I ended up making a little bit of money on this decline and this rally up. I didn't do much. Let me just show you guys. I did 100 shares. I mean, for intraday trading, I know that's almost 50 grand, but that's not a lot for intraday trading. And again, that wasn't really the purpose here. And then I ended up closing it out at 60. I think I made 13 bucks in that. So that was diddly squat. But I made money, and it really wasn't right. I mean, it ended up making this big spike to the upside, and that's what you have to be prepared for on an intraday basis. So this is the way it works. Now, I got short again, and I did it on the taking out the low of this big bar here. I'm like, you know what? I mean, if this takes this out, we're probably going down to test the 40 or maybe even get worse. So once it got through the 40, I went to a break even on that trade. And so I got two trades on, and within 2 minutes, I was at a break even in both of them. So that I like trading that way, especially intraday. I don't know that I necessarily would recommend that if I'm trading off of a weekly or something like that. I mean, it's going to be very hard to do it anyway, but sometimes you'll get a move in your favor in that fashion, and I think you do want to take advantage of it. Now, the other thing I wanted to point out, when we came down to this low, we were testing the low of this big green bar, but we were also at the midpoint from this low up to this rally, we came down to the 50% retracement. So these are factors. So once that happened, the problem is I could see that this was developing, but I don't trade intraday, and I certainly don't do it on TradingView if I were going to. And so I was clumsy with the trading, and I didn't know what I was doing. And it turned on a dime and took off. And so I wasn't really able to get anything better than a break even in that trade. But I wanted to point out, so I did 2 trades. My premise was, let me risk here. I was risking about 30 cents to the stop for a move down to this low, which was about $1.50, $1.70, something like that. And so that was a really good risk reward trade. And my premise was that I thought we were going to close poorly. I couldn't have been more wrong, right? We ended up coming down to the 50% and rallying to the upside. But I took 2 trades and ended up making a little bit of money when it was all said and done. And so that I want you to understand this, because you need to follow what's going on. You need to keep an eye on key bars on the higher time frames. I mean, I didn't even go to the hourly or anything like that. That might have even helped me more. I was just looking at these 2 time frames and seeing if I could see what was taking place and if I could keep the risk down. It's all about controlling risk. I think if you can control risk, you can be pretty successful at trading, no matter what your time frame is. So anyway, one other thing I'd point out, you don't want to trade this strategy if you don't have a re-entry approach. So I knew that if I got stopped out to the ups on this move to the upside and it came back down, I was going to get short again. I already knew that before I was getting out. So you can't just get out and not have a re-entry strategy, because you'll end up missing moves. I mean, for all I know, this could have gone all the way back down and I would have been stopped out for like a dinky little profit. But you got to have that strategy in place and sort of trade what the market's telling you at that point. All right. So anyway, I hope this helps. Go ahead and post any questions or comments. Thanks.